Hi, I'm Keegan and welcome to the Lending Alliance. Today, we're looking at the short version of offset accounts and then the long version of understanding offset accounts. Starting with the 30-ish second elevator pitch, an offset account is a powerful tool that can help you reduce the interest you pay on your home loan whilst maintaining full access to your funds whenever you need them. Well, that sounds a bit like redraw, doesn't it? Well, sort of. But the offset account's different in that it's a separate transaction account running in parallel to your home loan. It's more flexible, it's less exposed, and doesn't play funny buggers with your tax deductibility. Be sure to get your own accounting and taxation advice. And you're probably loving this idea of a juiced up savings account. There's always a catch, isn't there? Well, in most cases, most lenders will charge a small monthly or annual fee to gain access to an offset account. We can help you run the numbers to make sure that if there's a benefit, it outweighs the cost for your particular situation. And to be honest, in most cases, the offset offering makes a lot of sense, both practically and financially speaking. And whilst it's great to provide you a quick summary, I really encourage that you stick around as I'm about to go into a lot more detail on all things offset accounts. So, taking it right back to the top, an offset account, it's a transaction account linked to your home loan. You can deposit or withdraw money from this account just like a regular transaction account. The key difference is that money held in your offset can help reduce the amount of interest charged on your home loan. And the higher the balance and the longer the money sitting in this account, the less interest you'll pay, and it'll basically help you pay off your home loan faster. But it's worth noting that the offset feature is typically only available on variable rate home loans, though some lenders do offer it on selected fixed rate loans, but that would be the exception to the rule. So here's an example of how an offset account works in the real world. Let's say you have a $600,000 home loan. You then deposit $55,000 into your offset account. You'll only be charged interest on $545,000 rather than the full $600,000. The savings will occur for as long as that $55,000 stays in your offset account. And over time, the interest savings could potentially amount to thousands of dollars and cut years off your home loan term. So expanding upon the earlier example, let's see how much you could save. So let's say you've got a $600,000 home loan, your interest rate is 5.75%, your initial loan period is 30 years. If you keep $55,000 in your offset account for the life of the loan, you would save $202,209 in interest over this term. You would also crucially reduce your loan term by 4 years and 9 months. I also like to show people this Bank West one here, where if you are, putting additional funds into it, in this case, we're putting $1,000 a month extra, you'll see on top of that, we're saving even more time, right? So think of an offset account as a standard everyday transaction banking account. You simply deposit money into this account and the bank will factor in the daily offset account balance into the interest payable calculations for your loan repayments. Many people will have their salaries paid into the offset account and pay for everyday items like groceries and bills from the account. So if you're comparing the offset account versus a normal savings account, generally speaking, your money works harder in the offset account compared to the regular savings account. And that's all because the interest rate you pay on a home loan is generally higher than the interest you earn in a savings account. And not only that, there's another advantage in that the interest you save by using an offset account won't be considered income, and it means you won't be taxed. On the other hand, the interest you earn on a savings account will be generally considered income, and that means it may be taxed. Once again, get your own tax advice. And so let's see, to offset or not to offset? That's the question. So the argument for an offset is definitely compelling. But before you decide on what will be best for you, make sure you consider all aspects, because offset accounts typically attract that monthly or annual fee, so you need to weigh up the cost versus the potential savings before you proceed. But for many Australians, they could stand to benefit significantly from not only holding an offset account, but using it correctly. I'll have clients come to me, new clients, and I'll see how they're set up and they're not using the offset as best as possible. So make sure, if you've got one, you're using it correctly. And offset, redraw. So what's the difference? So redraw facilities work in a similar way to offset accounts in that a fundamental concept, and the idea is about saving you interest payable on your home loan. And whilst they're similar, there are key differences. So generally speaking, redraw facilities are less flexible, they can mess around with your investment tax deductibility, and of course that's in reference to an investment property, but it's something that many people don't consider about their current owner-occupied home loan, because one day that may turn into an investment property. So you don't want to go play funny buggers with the investment. Funny buggers on the owner occ, and then it turns into an investment. So make sure it's right for you. But just like anything in the home loan space, for every question I possibly answer, and hopefully I've answered some for you, it usually raises even more topics to cover off on. And that's why we created the Lending Edge, a centralized location for you to learn about all things home loans. So if you haven't done so already, check out our articles explaining how redraw facilities work, or even the article where we compare the differences between offsets and redraw facilities in a lot more detail. If you've made it this far, thank you so much for your time. My name's Keegan, and hopefully I'll see you in another video.